The next high growth stock I plan on buying. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the clothing line to prove that fact. And today we are speaking about yet another SPAC that has already gone on a very nice run, but I believe has so much more potential. And potentially the best part about this is it's not an EV related stock. So if you're like me and have interest in so many EV companies already, this could be some diversification. And potentially what's even more exciting is it's in the cloud industry, which is another very rapidly growing industry, as we will be speaking about today. So as of right now, the SPAC is Apxt, the ticker symbol is Apxt. You can see on Friday they actually went up 29%, and well, that was pretty much the first trading day. They opened up 33%, there was a little bit of a dip, but very good response. So essentially, if you've no idea who these guys are, they are the largest Microsoft 365 data management solutions provider, and the merger is valuing the combined companies at about $2 billion. Now, the particular part of the cloud that this company is operating in is right here, okay? Migration, managing, and protecting Microsoft 365 and SharePoint data. So it's not so much about data analytics, something that we see from a company such as Snowflake. Migration, managing, and protecting. And the CEO of Microsoft said very recently, we have seen 2 years worth of digital transformation in 2 months. So yes, very rapidly growing industry that was already pre-Roni a rapidly growing industry. So today I want to speak about the stock. I want to speak obviously about this initial jump up, what I think could potentially happen. We'll speak a little bit more about what the merger is actually going to look like. We'll have a look at their up-to-date investor presentation, which is as of November 2020, and hopefully I'll let you guys know why I really like the look of this company with a long-term outlook. So my friends, right before we get into the video, can I please ask you to hit that juicy like button? It's free, it helps me out with the algorithm. Drop me a comment down below, let me know what you think of this company, you know, if you've been researching them, or at the end of the video, let me know what you think. And please, if you are indeed new around here, hit that juicy red subscribe button, join the family of investors. We just broke 60,000, so thank you guys so much. Also, if you're interested in joining my private Discord group, hit the first link in the description. In there you will get my buy and sell alerts and access to over 40 private chats. The last 4 stocks we bought, which have all been within the last 30 days, are up between 75 to 140%, but it does charge the first of every month, so maybe wait a couple of days. And if you want 4 free stocks, 2 of which are valued up to $3,700, click the second link in the description, sign up to Webull, deposit $100. It's that simple. It's free money, baby. Now, with that being said, let's get into this, baby. So it's exciting. I'm excited that we can speak about a SPAC that's not EV related. As of late, okay, every SPAC has been flying up in value. I mean, you could not buy a bad SPAC. And it's awesome. Lots of people are making lots of money. But if you guys have been on this channel before, you know that I still only like investing in companies that I like from a long-term perspective. I'm not trying to swing these or day trade these SPACs. And if you've been in the market for more than 3 or 4 months, you've seen that just as quick as these SPACs can go up, they can come crashing back down. That's why I like investing in the companies that's actually behind the SPAC, okay? Not just the ticker symbol, not just the price action, not just the hype. And what I actually like here is there hasn't been as much hype behind these guys as there has been for a lot of these other EV SPACs as of late. I mean, look at Arrival, look at Geek, look at Romeo. So much hype. These guys do have some hype behind them, but not the same. So again, they're the largest Microsoft 365 data management solutions provider. Straight off the bat, that's a beautiful opening line. I mean, it's Microsoft 365, baby. So they're an independent software vendor of software as a service solutions for migrating, managing, and protecting data in Microsoft 365. The new ticker symbol will be AVPT, and it's expected to merge in the first quarter of next year. So they provide critical data management solutions that enable organizations to make their digital collaboration systems more productive, secure, and compliant. As more of the world moves online, as more businesses do a lot more business online, systems like this are going to be very important. They have achieved 8 quarters of impressive growth, which we will be getting into very shortly, and they also have positive free cash flow. Seeing this for a SPAC is awesome. Going public now gives us the ability to meet this demand and scale up faster across product innovation, channel marketing, international markets, and customer success initiatives. Absolutely beautiful. That's what we want to see. So the co-CEO and CFO, Jeff Epstein, no relation to the other, you know, Epstein, advises over 100 portfolio companies, daily interactions with CEOs and CFOs. This guy knows his way around companies. And this man's from the Apex executive team. He has served on 20 boards and advisory boards over the past 8 years. Brad Koenig, the co-CEO, partner, 15 plus years at the global head of technology investment banking at Goldman Sachs. Awesome. Been in Silicon Valley since 1987. So the investment thesis right off the bat, a market-leading SaaS company, highly capable technical leadership team, powerful tailwinds for the Microsoft cloud, That's an absolutely massive one. It was already growing, but as the CEO of Microsoft said, it's growing even quicker than before. Key leader in Microsoft Cloud data management, high quality and diversified customer base, which we'll get into, compelling financial results and business model, which again, the compelling financial results is massive, and an attractive valuation. So they're going to combine and create a public listed company with about a $2 billion market cap. Now that does leave us with an implied enterprise value of 9 times 2021 estimated revenue, but for 2021 estimates, that's not terrible. A lot of the time in these transaction overviews, they'll give us 2024 or 2025 estimates so that it's a lower multiple, but this is somewhat normal, somewhat okay. So the transaction is to be funded by a combination of approximately $352 million of an Apxt cash in trust and a committed pipe of $140 million from institutional investors. Quite a nice looking management team for Avepoint as it stands, a lot of experience. We're looking at a total addressable market of potentially $33 billion by 2022. And we're the biggest player. They have over 1,300 employees in 29 global offices. So guys, these are very, very well established. This isn't what we see a lot of times with these SPACs. Compelling growth vectors, very important to understand. I mean, we are looking at this as a growth stock. R&D driving increased product line, expanding channel and distribution partnerships, international expansion, and selling more to existing customers through investment in sales and customer success. Love to see that. So 2020 estimated strong financial performance, $148 million of revenue, 30% ARR growth, 14% EBIT margin, and fresh capital to invest in growth. Potentially the most important thing. All organizations need help managing their data, okay? So the amount of data is growing fast. Again, that comes back to what I said earlier on in the video. More people doing more things on the cloud. More businesses doing more business online. Data governance is hard and getting harder. So digital transformation has accelerated during the RONI, with Microsoft Cloud gaining significant momentum. Again, the CEO, 2 years of growth in 2 months. That's insane, and I can only imagine it's gotten much, much bigger since this quote was said. 59% of the workforce would prefer to work remotely. 95.4% projected growth in desktop as a service 2020. 37%, okay, increase in cloud spending in the first quarter of 2020. So just think about these guys. They bridge the gap between what Microsoft Cloud offers and what the enterprises requires. They need compliance, they need governance, they need transformation, they need to be on the cloud to the premises. So the advantages, essentially it all just comes down to these guys being able to work with Microsoft beautifully. Large and growing addressable market, I mean, yeah, it looks beautiful. 13% Microsoft Cloud penetration, $1 billion. Current Microsoft Cloud size, about $5 billion. Microsoft Cloud growth is going up, additional cloud at $33 billion by 2022. The market's growing quite quickly, and I think we all expect it to grow very, very quickly. Here's a list of just some customers who could benefit from a service such as this one. Pretty much everybody who does anything online. Multiple avenues for growth. So one that we always love to see is to sell more to existing customers. It's a lot cheaper to keep a customer than to acquire a new one. So if you can upsell to them, get more revenue per customer, awesome. Increase the SMB footprint. Capture entire Microsoft Cloud customer base, that would be absolutely awesome. Expand the target industry focus and further international expansion. All makes a lot of sense, all provides an awful lot of growth potential. Now the financials, look at this, year over year ARR growth is awesome. It's only been going up as well, from 18% 2019 Q1 to 29% 2020 Q2. It's been going up consistently every quarter. Compound annual growth rate from 19 to 2022 estimates, recurring revenue 38% and revenue 30%. That's beautiful, guys. That's fantastic. So total revenue year to date, $66 million. Year to date 2019 was $51 million. 2022 estimates of $257 million. Gross profit, we are making it. It is awesome, okay? And the margin percentage is very, very good as well. Now, SPACs have been going up like crazy as of late, my friends. And this one is no different. We see this initial very loud jump. So there's obviously going to be a big gap created somewhere in the realms of 11 to 14 or so. I do think there's a chance that we fill in some of that. I do think there's a chance that we see a pullback of sorts, but I like this company, okay? I like the look of this company as a long-term investment. I really, really do. And this is the first time I've looked at a SPAC in a little while and thought, I'm confident buying now, even at what I believe could be potentially inflated prices in the short term, because I don't want to miss out on this one. I think in the long term it could be fantastic. I do also think it has the potential to be a SPAC that, you know, is up at $20, is even up at $30 within a week, 2 weeks, a month. But I am interested in this from a long-term perspective. I think there's money to be made for pretty much everybody here. Now, I do of course also think that there is downward potential. I mean, the pipe is at $10 a share. We're at $14.20. There's pretty much straight away a 30% downside. We're already up 7% pre-market market as well, we could be looking at a 50+% downside, which is something that needs to be understood when it comes to these SPACs. And then when it actually goes public, it could always go down below $10. I mean, we've seen it happen before. But I do really like what I'm seeing, and I do see this as a long-term investment. And I will be honest, guys, I am planning on opening a position. It's not 100% confirmed yet, but the odds of me buying some of these guys tomorrow on Monday is quite high. Now guys, that was just an initial video I wanted to make on these guys because I think they're very exciting right now. I have been doing a lot of research into these guys and into the industry as a whole. So if you would like, a real deep dive into this company, just let me know in the comment section. I can make that happen, my friends. If you enjoyed this video, took some value, some insight, please consider hitting that juicy like button, dropping me a comment down below. Let me know what you thought of the video and what you think of this company. And of course, subscribe if you're new around here. Again, the link to the Patreon is the first one in the description, but you get charged the first, so maybe wait a couple of days. And if you want those 4 free stocks, hit the second link, sign up to Webull, deposit $100. It's free money, you get money, I get money, it's a win-win. But anyway, my friends, if you watched this video all the way until the end, you are a true legend, and I really do appreciate you being here from the bottom of my heart. Thank you so much. I hope you have an absolutely fantastic day. Let's make some money next week, baby. I will see you for another video very soon. Peace.